Our biggest economic and monetary rival is China. And with all of this talk of de-dollarization, China is at the heart of those discussions. And we are at the cusp of yet another recession. And that combination means skyrocketing gold and silver prices. I'll explain as we explore. What is this talk about a recession? We just got out of one not too long ago. And yes, we were in a technical recession for 2 months, and we are technically out of it. But many of us feel that we're really still in it because we know that the chefs at the Cook the Books Club continue to kind of tweak the numbers in such a way to make things look good for certain politicians. But in reality, things are not well here in the United States. And in reality, they're not well around the world either. There's a lot of concern out there, and rightfully so. I mean, especially with when you take into consideration all of the money that has been printed here in the United States and around the world, and we're seeing the effects of inflation rear its ugly head at a pace that we've not seen in over 40 years. In fact, those same chefs that cook the books probably doing the same thing with the recession numbers as well, too. But I digress. But there is one ex-Treasury Secretary who predicts that we are going to see a recession, and probably a deeper one, by the end of this year. A recession is most likely right around the corner, according to a former Clinton and Obama administration official said recently. This is from the Epic Times, is reporting on this news. And if you like videos like this where I talk about the markets and how we can prepare to protect ourselves with hard assets such as gold and silver and other ways to prepare, I hope you will consider pressing that thumbs up button down below and subscribing to the channel. The chance that a recession will have begun this year in the United States is probably about 70%. I think that puts me in the pessimistic end of the spectrum of opinion. This is what Lawrence Summers wrote on his Twitter account. Some economists have recently become more optimistic about the U.S. avoiding a possible recession after months of positive job reports and other relatively positive economic indicators. However, negativity about the state of the economy again emerged after a series of bank failures coupled with federal bailout efforts last month. Summers was the former Treasury Secretary under former President Bill Clinton and was a former head of the National Economic Council under President Barack Obama. It's not something we can be certain of, but as I put together the lags associated with monetary policy, and that is really the key here, folks, it's about the lagging indicators that are going to come back and bite us. But the risk of geopolitical and other shocks and the continued action around inflation affecting commodities, 70% would be the range that I would be in, he says. This is according to what he told Foreign Policy on Sunday, adding that he believes a recession will come within the coming 12 months. That means it could begin anywhere before the end of this year and early into next year, which is an election year, which is important because not only do geopolitics play a role in this, but also we have domestic politics as well that should be considered. Former U.S. Treasury Secretary Hank Paulson told the Financial Times that he too believes a recession will be coming due to the banking crisis. About a month ago, Silicon Valley Bank and Signature Bank collapsed that made headlines, and this forced the Treasury, Federal Reserve, and Federal Deposit Insurance Corporation to intervene. Some things we know and some things we don't know, Paulson told the paper. What we know is that if you're running a small or regional bank right now, you wouldn't be lending. The capital markets shut down for 2 or 3 weeks. Now they're opening, but not to the extent that they were. So I think it's pretty likely we will see a recession if you look at what's happening to credit. He did not predict when those factors might impact the U.S. economy. It will take a while to manifest itself. And the Bureau of Labor Statistics data released last month, this is the Cook the Books Club, a phrase coined by the late Jim Comiskey, This shows that the U.S. economy added 236,000 jobs in March, while the unemployment rate dropped to 3.5%. And in a National Association for Business Economics survey about a month ago, 58% of the 48 economists who responded envisioned a recession sometime this year. The same proportion who said so in a survey in December. So there's a lot of folks out there who think we are going to see it happen. Now, what does this have to do with gold and silver? Well, there's dark days for gold and silver whenever the dollar is strong and whenever there's, quote, good economic data. But a lot of that can change, especially if that data are skewed in such a way to give a false sense of prosperity and progress. And that's why I think we ought to be very cautious with how we interpret these numbers. Not necessarily for political reasons, because I would be saying the same thing under a Trump administration or under a politician that I more agree with economically. In fact, I even did question some of these numbers during that time as well, too. The fact is that we are living in a world now where it's hard to trust any of the organizations that report some of these numbers. I used to not think that way. I used to want to believe some of these agencies and organizations, but some of them were supposed to be nonpartisan, but sadly, that's not the case anymore. And the idea, too, is the motive behind it. They don't want to, they don't want to stoke any panic out there. But nonetheless, panic will come one way or another if we continue to kick the can down the road. And they are not only doing that with our debt and deficit spending, but they're also doing it with some of these numbers, I feel. And what we know they cannot hide is that we are under an inflationary period. And even though the Federal Reserve has raised rates, the central bank has raised its benchmark interest rate 9 times over the past year, the Fed's policymakers are betting that they can achieve a so-called soft landing, slowing growth just enough to tame inflation without tipping the world's biggest economy into recession. The resulting surge in borrowing costs has walloped the housing industry and has made it more expensive for consumers and businesses to spend and invest in major purchases. Yet, as higher loan costs spread throughout the economy, analysts are generally skeptical that the U.S. can avoid a downturn. The main point of debate is whether recession will prove mild, with only minor damage to the hiring and growth, or severe with waves of layoffs. And folks, I think this one may be a bit more severe. Maybe not a detrimental or catastrophic, but I think with inflation where it is, we could see employment numbers fall just enough that we may get into a light stagflationary period. And that stagflation is something that I think that we've got to keep in mind, that is going to mean that we're going to see higher gold and silver prices, because no longer can we trust an inflated dollar that is not, especially if the Federal Reserve starts to reverse course and pivot and starts to print more money. That's on top of the already mandated legislation into the tune of trillions of dollars for all of these projects and the like that are, quote, supposed to, to stimulate the economy. No, it's not what's going to happen. The dollar itself is going to suffer in terms of its strength. And I think during that time, we are going to see more and more of this chipping away at the dollar's dominance around the world. And I'm talking about into next year, and maybe even in 2025. We're going to see more of this if we hit into a deeper recession. I believe we may see something similar to what we saw in 2007 and 2008. You couple that with the inflationary environment, anything above 2%, even if it's 3% by then, if the Federal Reserve, is able to make it go down that much. And again, how are these numbers derived? What's going on there? How are they reported? And by the way, do we really trust? How are they averaging these numbers together? It's a consumer price index. The consumer price index is a calculation of the most common goods and services outside of the most regularly fluctuated items like fuel and certain food and the like. And taking that into account from surveys done in the 12 districts of the Federal Reserve System, well, there you have it. That's how they compile that data. And you know who's compiling it. And so when you think about that, it does make you wonder. And so therefore, I believe that we're going to see a stagflation environment. And that's going to bode well for gold and silver. This recession, folks, I believe is when gold and silver will shine. And they possibly could skyrocket even. And again, that's a prediction based off of other economist predictions, some of which who don't share my ideology or some of our ideology out there. Because in the end, we must be realistic about things. Now, does that mean you should just go out and rush and buy all the gold and silver you can? No. Does that mean you should take my prediction or what I'm thinking is going to happen as the gospel truth? No. Question everything, even the very words that I say in this video and what have you. But I tell you what, I could see the environment. I could see this happening more so than ever before. There's a lot of things that are stacking up against the economic health of this country. And that deck stacked against us in the economy is going to bode well for gold and silver, which may not be a good thing, by the way, just so you understand, because in the end, it's about the overall health and well-being of us as individuals and the economy in general. Nobody wants to see a sour economy. I would much rather have lower gold and silver prices and be proved wrong than right. I don't care who is in office, who is president, and which political party is in power, or any of that sort of thing. I would just rather see people do well, in spite of whether or not we're right or not about certain economic situation or conditions that we find ourselves in. But the fact remains, folks, and this you can take to the bank, pun intended, that what they are doing, what the politicians are doing, what the Federal Reserve is doing, is unsustainable at some point. Some point, something's got to give. And when you have other nations around the world who are trying their best to declare independence from the dollar, that's a recipe for potential disaster, and certainly where people are going to put more trust in precious metals and maybe even other alternative assets like cryptocurrencies. We're seeing surge there as well too. But in the end, the ultimate form, the ultimate safe haven is indeed gold and silver. And I think in the end, when it all boils down to it, it all comes back down to what has held its value for thousands of years, in spite of economic conditions, in spite of ideologies, is gold and silver. Let me know what your thoughts are in the comment section below. Hope you found this video insightful, informative, and educational. I want to encourage you to please rate, share, comment, and subscribe.